Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Northrop Grumman stock by analyzing their financial statement and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 68 billion market cap. They're trading at $4.55 a share, and they have 148 million shares outstanding. Northrop Grumman is one of the world's largest weapons manufacturers and military technology providers. They lead the development of the B-21 Raider, a long-range stealth strategic bomber that can drop conventional and nuclear weapons. That will replace Northrop's own B-2 Spirit, the world's only known stealth bomber. This company is responsible for developing the James Webb Space Telescope, an orbiting observatory launched in 2021. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow was $2.1 billion every year, except in 2022 it dropped to $1.5 billion. It looks like they were investing more in CapEx. Pretty low margins, 4 to 6%. Net income is the profit or loss on the income statement. It's revenue minus expenses. That dropped a lot from $7 billion way down to $2.2 billion. It is up a little bit from 2023, up 5%. Their margins were solid in 21, 20%, down to 5% in the trailing 12 months. Revenue is a sales for the company, and that goes up a little bit from $36 billion to $40 billion. Revenue per share is $270. Share price is $4.55. Price of sales is share price over revenue per share. So it looks like it's around a 1.4. They do pay a dividend of 1.77%, which cost them $1.2 billion, which is a little more than half their free cash flow. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's $73 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $65 billion. We divide that by 148 million shares. And we get a calculated stock price of $4.35. They're trading at $4.55, so they're trading at a 5% premium. It's a sell according to the model. There are 70 companies in the same industry as Northrop. And if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on CapEx, $1.7 billion. These are the investments in property, plant, and equipment. They have a pretty bad debt-to-equity ratio. For every dollar of equity, they have $1.20 of debt. They pay a good dividend, 1.8%, a lot higher than the median average. Lockheed is number one at 2.7%. They generate a lot of free cash flow, more than Boeing, GD, and TransDigm. They rank 7th in market cap, $68 billion, a little more than 1/3 of GE. They're trading at 5 times book value, which is pretty much the average. Trading at 31 times earnings, pretty much the average. Trading at 32 times free cash flow, better than the median average. And trading at 1.7 times revenue, better than the median average. They generate $40 billion of revenue, a lot more than TransDigm, about the same as GD. Their 5-year annual revenue growth rate is not great. It's 5%, which is the median. If you put $10,000 into this company 10 years ago, you'd be pretty happy at $46,000 today. That's a 16% annual return, a 358% total return. Let's go through the latest 10Q. This is for the first quarter of 2024. We'll start with the income statement. Revenue is up. It was $9.3 billion. Now it's $10.1 billion. Product revenue is up a lot more than service revenue. Product revenue went up about 15% from $7.3 billion to $8.1 billion. Service revenue is almost identical. Let's see if they give a breakdown of the number. Here's a further breakdown of the $10 billion of revenue. $3 billion in the aeronautics segment. $2.5 billion, or 85% of that number, is to the US government. $381 million international. Both grew a good amount from the first quarter of 2023. For defense systems, $1.4 billion, $930 million US government. International came down a lot. It was $388 million, now it's $260 million. Mission systems, $2.7 billion, down a little in the US, up a lot internationally. Space systems, up about 10% in the US from $3.2 billion to $3.5 billion, down a little international. Total U.S. revenue, $8.9 billion, which is up about 10% from last year. International is pretty much flat from last year. Here's a breakdown of the international revenue. $359 million in APAC, Asia Pacific, a little under $700 million in Europe, and then $127 million in all other countries. And there's a footnote, all other is mainly in the Middle East. So maybe Israel or UAE. Let's go back to the income statement. All the expenses tied to generating the $8.1 billion is $6.4 billion. So pretty good margins. In service revenue, the $2 billion of service revenue cost them $1.6 billion. And then they have general and administrative expenses, $1 billion. So total expenses, $9 billion. Operating income, $1.1 billion, up from $950 million. They spent $146 million of interest on their debt. They had a pension benefit of $168 million. FAS stands for Financial Assistance Scheme. So their net earnings, $944 million, up from $840 million. EPS, $6.34, up from $5.52. And they are buying back stock. It was $153 million, now it's $149 million. Let's look at their balance sheet. Current assets, $15 billion. Current liabilities, $13 billion. So current ratio above 1. Current ratio is current assets over current liabilities. They have $3 billion of cash, a little less than last year. Accounts receivable is $1.8 billion. This is how much money they sold on credit. So this is money owed to them, and they should receive it within the next 12 months. Unbilled receivables, $6.5 billion. Unbilled receivables are contract assets, pretty similar to accounts receivables. Inventory, $1.4 billion. Here's a breakdown of the inventory. $860 million of contracts in process, $357 million of raw materials, $90 million of work in process. Finished goods, $59 million. So it's $508 million of product inventory. The difference is the contracts in process. Their biggest asset is goodwill, nearly $18 billion of goodwill. Their total assets, $48 billion, up from $46.5 billion. Total liabilities, $34 billion, up from $32 billion. Their biggest liability is long-term debt, nearly $15 billion. Assets minus liabilities equals equity, $14 billion of equity. They profited $14 billion from running their business, and they generated $148 million of cash from selling their business. Let's look at their statement of cash flows. The first section is operating cash flow, and that was negative $700 million, same as last year. That's a big red flag. Usually operating cash flow is higher than net profit. In their case, it's a lot lower. It's mainly due to changes in working capital. In accounts payable, they had a cash outflow of $581 million. Last year, a cash outflow of $1.1 billion. So when they buy on credit, they use accounts payable. That's a cash inflow. But when they pay for those items, it's a cash outflow. So it looks like in the first quarter, they were paying a lot of accounts payables. That was stuff they bought in previous quarters. CapEx, $270 million. Last year, $300 million. These are the investments in property, plant, and equipment. In financing, they added $2.5 billion of debt. They bought back $1.2 billion of stock. Last year, they bought back $700 million. They paid out $280 million of dividends, and they paid $55 million in taxes on employee stock rewards. Because when they give employees stock in a company, it doesn't cost them anything except taxes. So in their financing section, they had a cash inflow of $900 million, same as last year. Let's look at a company on Simply Wall Street. Its last price, $451, $66 billion market cap, down 3% in the past week, up 1.6% in the past year. Let's see what they say about the company. Northrop Grumman operates as an aerospace and defense company in the US, APAC, Europe, and other countries. Their aeronautics systems segment designs, develops, manufactures, integrates, and sustains aircraft systems. This segment also offers unmanned autonomous aircraft systems, including high-altitude, long-endurance, strategic ISR systems, and vertical takeoff and landing tactical ISR systems. ISR is intelligence, surveillance, and reconnaissance. Its defense system segment designs, develops, integrates, and produces tactical weapons and missile defense solutions, and provides sustainment, modernization, and training services for manned and unmanned aircraft and electronic systems. Their mission systems segment offers command, control, communications and computers, intelligence, surveillance, and reconnaissance systems. Its space segment offers satellites, spacecraft systems, subsystems, sensors, and payloads. ground systems, missile defense systems, and interceptors, launch vehicles and related propulsion systems, and strategic missiles. They were founded in 1939, so that's 85 years ago, based in Falls Church, Virginia. Here's the stock price since 1990. It was $9 a share. That's stock split adjusted. And its low point was also in 1990. It was $7 a share. It broke through 50 in 98. Then by 2000, it was cut in half to 25. Then from 2000 to 2008, it grew to 80. In 2009, went back down below 50. And then went up 7x from 2009 to 2018, 350. The market came down a good amount at the end of 2018, at the beginning of 2019. So did this stock. The stock moves fairly close to the market. There was a big run up and then the COVID crash, so it brought it from 400 to about 270. And then in a little less than 3 years, it doubled from 270 to 550. That was its highest point ever. It fell about 20% over the next 9 months to the low fours. And then it came up to almost 500 and is trading sideways for about the past 7-8 months. It's been up or down, but within a pretty tight range. Simply Wall Street's price is $524. They say they're 14% undervalued. 21 analysts priced this stock at $503. The revenue forecast for 2024 is $41 billion, then $43 billion, then $45 billion. Free cash flow forecast for 2024 is $2.4 billion, then $2.9 billion, then $3.2 billion. Their revenue moves in the right direction, although it was pretty flat from 2013, $25 billion, to 2016, still $25 billion. But then it grew nicely from 2016 to 2021, up to $37 billion. Came down a little bit, but started creeping back up. Now it's north of $40 billion. This is for the trailing 12 months. This red line is their debt. It was $6 billion in 2013, jumped up to $15 billion in 2017, and then it's been in that range since 2017. Up a little bit, then came back down, now it's back up. It's a little higher than $16 billion. And you can see their equity is usually pretty close to their debt. Right now, equity of $14 billion, debt of $16 billion. And they have a good amount of cash on their balance sheet. It's currently $3 billion, plenty to service the debt. Their dividend is usually between 1 and 2%. It was 2.2% in 2014, but then between 1 and 2 since then. The forecast is 2% for 2026. The CEO's salary went from $800,000 in 2017 to $1.7 million. Total compensation $25 million. Tenure as CEO 6.3 years. Kathy Warden is a cybersecurity and IT expert. Early in her career, she worked at GE for nearly a decade. In the past year, there's been no insider buying, but a lot of selling. 84% of the company is owned by institutions, 10% by the general public, and 5.7% from the employee fund. The biggest shareholders: Capital Research, State Street, Vanguard, BlackRock, JP Morgan 2.6%, Sanders Capital 1.5%, T. Rowe Price 0.9%, Schwab owns 0.5%. Their employee count has gone up from 65,000 to a little over 100,000. And the ticker trades on the New York Stock Exchange, Deutsche Börse, Xetra, London Stock Exchange, Mexican Bolsa, Euro TLX, Wiener Börse, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below if you'd like to get a custom valuation or just support the channel. You can become a member by clicking on the link in the description below. Thanks for watching.